Okay, so a short intro of about us, about company. We are a capital and investment management company, providing listing and fundraising advisory. We are also a VC accelerator ourselves, and we have actually recreated a new membership platform and rebranded ourselves as VC
Okay, so
Club. Okay, sorry. And we rented ourselves as VC Prestige Club with the technology of AI, which is the today focus here. Our guru here, the AI guru is here with us at Gary. Okay, later he will introduce himself using keywords and also few metrics to actually better help um, our project to match with the investors based on the criteria set in the system. Okay, so with me tonight, I'm happy to introduce my two special guests and partners for this program. Both of them are with them with vast knowledge in capital fundraising and have been actually incubating and mentoring number of projects in their own respective field. And Dr. Nisa is from Nichifin Consulting, and Gary Fowler is actually from GDS Venture Studio, all the way from US. And welcome both of them. And maybe over to you, Dr. Nisa. You'd like to introduce yourself a bit before you pass over to Gary? Yeah.
Yeah, thank you, Janet. So I'm based out of Singapore and I've had a company called Nishwin Consulting. Now we are into basically helping, we work as a financial advisor for the startups and also as a corporate advisory in terms of corporate finance. So we help companies in mergers, acquisition and buybacks and things like that. So primarily, my hands-on is with the startups where I help the startups in mentoring and coaching them, and then also putting them in touch with the investors. So thank you, Janet, for inviting me over for this session today. Very grateful for that. Over to
Sure.
you.
Yeah, Dr. Nisa is also a lecturer in the London School of Management, right? You
Business.
teach there as well, right? Yeah,
Yeah.
yeah. Okay. What about, yeah, maybe Gary? Yep.
Yeah, so my name is Gary Fowler and I'm a serial entrepreneur. I've done 16 companies and I've had two unicorns. I was on the original management team of Click Software, which was sold to Salesforce for $1.35 billion 17 months ago. I'm also the co-founder of Viva.ai, a billion-dollar company located in Silicon Valley. I've started 16 companies, as I've said. I started the first accelerator in Russia. I lived in Moscow for some time. I also started the #1 private corporate accelerator. My particular area of interest is artificial intelligence and quantum computing. I've written 101 articles as of today in the last year on artificial intelligence. I speak a lot around the world about it. And our thing is going global. So we look at it as there's really three steps of going global. And I'll talk a little bit more about that today and why it's critically important during this digital transformation that we're in. So thanks for your time, and I look forward to speaking to you more.
Right. Okay. Okay, we'll move in. Thank you both for your very impressive background. You did, and okay, tonight we have actually put together our expertise, the knowledge here, and coming up with this series of questions to actually help businesses and startup to scale up and see how we can help you in this fundraising journey. So. Okay, let's start with some common objectives that most of the businesses and startup are actually facing when they are embarking the fundraising campaign. All right. So maybe can I ask, what is as an investor, let's say, because we all of us, we do invest as well. And also we incubate, we are mentors and advisors for some of the projects. And what are the the main consideration factors you'll be considering in investment and why? Maybe you can just share your insight with some of the audience here. Yep.
Yeah. So shall I take the question first?
Yeah, sure.
Yeah, so the main consideration that we look forward in the pitch deck is the value proposition which the founder or the business is presenting for the customers, right? Why I say that? Because if the value proposition is not there for the market, like whatever audience we are targeting through the business, then the business will not survive in the long run. So the main thing is about the product or service. Now, what quality does that product or service have? Okay, we first should be very customer centric. When I say customer centric, that means the pricing, the quality, the service has to be good quality and should be beneficial for the customer. Second thing that the investors they look at is the innovation, like what new thing that you have in your business. So are you making are you contributing towards the innovation or not? The third thing is the social angle. So will it serve the society? Does your product serve the society? Does your product solve the main problem, right? So these are the kind of things that are the primary things that we look at. Even if the founder is, let's say, from XYZ big corporation or anything, let's say he has got lots of years of experience and everything, but if the product itself is not appealing, is not contributing to the customers or society, then it doesn't make sense. The second point that comes after the product or service or the value proposition is the founders. What is the experience of the founders, and how have they built other businesses in the past? That is the key criteria which the investors look at. And then, let's say if it is a first time business, then even then, what are your technical knowledge or other kinds of what things that you bring in onto the table? Okay, even if you have, let's say, technical skills, do you have the commitment to raise the business? That this is the third thing that we look at. So commitment will come only if you are like, if you are doing the business for growth. Some people, they just come and say, okay, we want to do, we are doing this business, we are raising money, and then we will sell it in couple of years and then we'll move ahead. That's fine, that you don't have to tell in the first instance, right? First get the
Mm-hmm.
money, you have to be committed. Okay, it may be there as an objective. A lot of people, they have that objective. They are serial entrepreneurs. They raise one company, they sell it, they go for another company. That's fine. But where is the commitment? That's the third thing that we look at. Okay, so commitment is there. Like some people, they're working full time on their jobs and they're raising a company part time. When you don't have
Yes.
time to focus on the company, then how will you make sure that if you're getting the funds, how will you make sure that they are managed properly? So that is
Yeah.
very these are the key criteria that we look at. And then there are other things, that what are your go to market strategies? For example, some people say that, okay, we need $1 million because we have good marketing strategies plan, we want to advertise and we want to do this and all. Okay, but can you not go ahead with some like collaborations, or B2B first, or just getting your some maybe partnerships and some JVs or strategic arrangements, networking, etc. First try that, before you even market or advertise. So pilot projects and going ahead with your strategic alliances and investors, that will make project more successful, rather than just straight away going in for big advertisements, big marketing strategies and all. So that's not that those things are not going to work with the investors, because they will say, okay, you're not confident, you're not committed, and then
Mm-hmm.
that's why you need a lot of money to spend on your marketing and to introduce your product. If you need
Yep.
that money, that means you don't have business skills basically, right?
Mm-hmm.
So
Mm-hmm.
these are some of the things which primarily, even I look at, and I tell them that, okay, you need to focus on these things before you even think about raising funds. So bootstrapping should be there, strategic alliances, networking important before you launch the product, pilot study, pilot project testing has to be there, promoters, committed promoters, qualified promoters. Okay, and then
Yeah. It seems like a lot. Yeah, really many,
and,
many. Yeah.
yes, and the
Some of the
product.
key factors. What about Gary? You have something to add on top of what Dr. Nisa has just shared? Hey, I think you unmute yourself, please.
My
Yeah.
first
Okay.
company, I started at 21 years old. I was really fortunate. We did about $9 million in sales, and it was a sole proprietorship. So I learned the hard way. I'm a country boy from Pennsylvania, grew up in a little village of less than 500 people. So the journey's been a little different. So let me tell you, as an investor, I have a $100 million fund I created in Atlanta, Georgia. I started a $10 million seed fund, and I have my private money with some high net worth individuals that we invest also. So on one side, I'm an entrepreneur first, on the other side, an investor. But let me tell you what you look for. So the first part is the team. What does the team have? Do they have the right stuff in order to move forward? Are they an intergenerational team? So think about where we are today. We're in a situation in this digital transformation. Over the last 10 months, our lives have totally shifted. I remember 5.5 years ago when I had met the venture capitalist, one of the VCs that funded Zoom. And he said, "Oh, my friend Eric has created this new technology. You might want to check it out." I was one of the early Zoom users. And I would send a note out to my friends, "Hey, listen, join me on Zoom." And they had to download it, except they said, "Why would I want to use Zoom? I can use Skype." I said, "Because this is an incredible AI technology. Look at where we are now." I wrote a note to Eric about 3 weeks ago, 4 weeks ago. He's worth almost $20 billion today, and about 400 million people every day use Zoom. Our lives has dramatically shifted. The way that you get investment has dramatically shifted. You need to digitally transform in order to be successful. So one is intergenerational, culturally diverse teams. So men, women, Chinese, American, Greeks, Australians. We want a mixed team. Why? Because you want to have different viewpoints. The different viewpoints enrich the company. The third thing is decentralized teams. So I've done a lot of work in Russia. I use a lot of Russian programmers because the cost is less and the quality is high. Look for where you can get the best work. The other thing is what we do is I'm in Silicon Valley. We create Delaware corporations, bring people to Silicon Valley. Why? Because half the money in the world is still located there. And if you want to get contacts for places like from Japan, from Docomo, they're located in the valley. The CEO of Docomo Innovations is in Palo Alto. If you want to get Magna out of Austria, one of the largest contract car manufacturers, they do the Z4, the Glendon wagon, the Toyota Supra, et cetera. They're located in Silicon Valley. General Motors, Chinese investors, Israeli investors, European investors, they happen to have offices there. So it's a great place. If you're going to, I'm a country boy again, Janet. If you're going to fish, when I was a kid, you go to the pond where there are fish. You don't go to the ones that don't have the fish. You want to maximize the opportunity. You're going to be successful. The other thing is there's a lot of knowledge to be shared there. So it's a great place for that. I look at, today is one of the greatest opportunities that I've been, as I said, people talk about building unicorns. I've been blessed because I've been able to be involved in two. Eva, I co-founded, and Click Software from Israel. I was on the original team as a senior vice president of the company, named the company, came up with a family of products, and did an IPO on NASDAQ, et cetera. So you can do it. You've got to make sure that you visualize. I look at the team who's focused and yet who's flexible. Because if you have a flexible team, times change and you need to adapt as a company. So you need to have a flexible team. The technology, as we said, I look at artificial intelligence. Artificial intelligence is the new electricity. Over the next, so imagine today, we're at the beginning of the 20th century. Nikola Tesla has just come out with alternating current. Look at what happened over the next 30 years to our lives. Well, that's what's going to happen with artificial intelligence. And as I write a lot in Forbes magazine, quantum computing is next. So I look at companies that can really help us deal with the massive amounts of data around us. As Alvin Toffler said in his book, Future Shock, we're in a state of infobesity. We are inundated with information. Think about how all the viewers here, ourselves included, think about how many times every week somebody says to you, "I sent you an email. Did you get it?" And they said, or "I sent you a message." And you say, "Well, where is it? WeChat, Telegram, Viber, right? Facebook, LinkedIn." We're inundated. We don't even know how to manage our own universe today. So think about it. Each one of the people on the call today have about 300,000 items in their personal cloud. The entire number of websites in 1996 was 257,000 websites. You have more information in your personal cloud, the entire World Wide Web in 1996. But the thing that's amazing is it doubles every year. In 5 years with the Internet of Things, you'll have 10 million items. You tell me in 5 years if I say, "Janet, I sent you a PowerPoint presentation. Did you get it?" And you look through 20 different repositories and 7 email addresses, right? I don't know.
Where,
So
where, where did you send to?
Exactly. And the situation is, I talk to CEOs of some of the largest companies in the world, and they have the same
Yeah.
problem.
Mm-hmm.
The companies that crack that, the companies can help us not only understand the data, but help us make some very informed, intelligent decisions, and also make decisions for us, are the ones that are going to win.
Mm-hmm.
And I'm looking for companies that have the right stuff, and as Steve Jobs said, think differently. It's critically important that we think about challenges differently. Those companies will win.
Yeah, I totally agree. Yes. Well, nowadays, I mean, in a sophisticated world, and and a fast-paced kind of technology is changing every day. We really have to catch up. Really play a catch up. Yeah. Even the in the project innovations part, we've seen a lot of new projects coming, and sometimes it's really eye opening. I've never seen such kind of innovation before. Really. So every day I'm learning as well when I receive those texts, from people sending to us, right? Okay. If anybody has any question, you all can please type on the chat box. Yeah, yeah. We can ask question along the way. Don't have to wait till the end. Yeah. All right. So coming to the next question. Okay. Now we have shared about what are the main consideration factors that investors are looking for in the projects. All right. And the next thing is the common pitfalls fundraisers makes in their campaign. So always people make mistake, and so what do you see as a common pitfalls that the fundraisers make in most of the pitching event that you've come across? You'd like to share some, maybe,
Yeah,
so that
sure.
our audience can benefit from them? Yeah.
Yeah, I mean, I can say a few things. So one is they exaggerate, they bullshit too much. They come up with things that are true, you know.
Oh,
And
really? Okay.
you can see through it. I mean, it's like they come up with exaggerated facts. I
Uh-huh.
had one guy tell me, he said, I have the best battery technology in the world. And he
Mm,
said, we're going to own this market. We're going to be a $40 billion company, right?
mhm,
And
mhm.
and here's somebody that has no sales, that's a scientist, that's telling me he's going to dominate it. And I'm listening to it and I'm thinking, this is like BS. It's not true, right? And so
Okay.
make sure that you have your facts correct. The other thing is, the thing that you need to do is, what makes people comfortable? Revenue. So have you generated any revenue? Do you have any pilots? So
Mhm,
I look at people that have done customer discovery, that have gone out and talked to potential customers and to see if they really want it. Because, one of the challenges is they come up with, I have a great tool, a great product, especially people that have engineering backgrounds, but nobody wants it, or it's too engineered and too expensive. So make sure that you've done your customer discovery. The other thing is, I want to make sure that the founders themselves are the ones that are going out and doing the selling. The initial sales should be done by the founders. You don't want to
uh-huh.
irritate yourself with salespeople coming in and spend a lot of money, waste money. You need to go, if you're the CEO of the company, if you're executive and founders of the company, you need to be able to sell it. You need to be able to get the message out, and you need to be able to speak, because the people that can take the words and to be able to curate those words and turn them
Mm.
into pictures are the ones that are going to win. So I
But
look at
not all founders are born speaker. Some of them really they can't speak well. Then how? So they
well,
need they
that's
need
a
to
big
go for training, isn't it? Like embarking on some of the courses.
Janet. I went to Stanford University and I took acting courses and I took business courses. It was
Yeah.
a special program for executives. And I took the thing living in Palo Alto specifically for that. You need to
Mhm.
practice and you need to do it, because the people that are the best at being able to run the companies right from the outside, but part of it is to be able to sell, have to
Mhm.
have the ability to be able to communicate. So it's critically important. And I look for that.
Mhm.
And the other thing is, I did a TED talk. So if you look on TED, you'll see my TED talk
Mm.
talks about, being positive. So it's like, oh, I don't know, especially based on different cultures. Some people say,
Mhm.
oh, I don't know, especially the Russian culture, the
Mm.
Slavic culture. I don't
Mm.
know, maybe, I'm not sure, but you got to
Mm,
like be sure of yourself. If you're not sure yourself, I'm not going to invest my money in your company if you're not sure if you can do it. It's like,
mm,
maybe I can do it. Okay, forget about it.
mm,
You know, I want to understand not only can you do it, but what kind of facts do you have to back it up that you can do it. And if you can do it, and I believe in those dreams, then it comes through. And part of being a great founder is the ability to be able to communicate, the ability to get the facts out correctly, the ability
mhm,
to be able to present a positive, pragmatic story.
mhm.
Mm.
Okay, Lisa.
Yeah, I would like to add. So I'll give you some examples. The pitch decks that before even taking to the investors, I rejected, and
Okay,
what are the reasons for that? Okay,
okay, sure.
so the first one that I would like to mention here is that some of the founders, they do not assess their external environment properly. So
Uh-huh.
external environment, because any business, like even if you take a strategy in the business, we have to do pest analysis for that, right?
Yep.
So they don't do that, and they think, because every founder thinks that the idea that they have is the brilliant idea. That is what they think, right? So when they focus too much on the idea, they forget about how it will fit in the overall external environment. For example, now we have a COVID situation. So then in this particular year, that the full year we have seen, founders should have focused on some of the things that are more relevant to, like, let's say, post COVID normal or current situation, which will work. For
Mm-hmm.
example, if companies are coming to me for, let's say, commodities or oil and energy companies and things like that, uh,
Mm-hmm.
then who would fund money for these kind of businesses today, right? So
Mm-hmm.
that's and the second thing is also ESG is like the buzzword. So when the investors are focusing on ESG, then why will they fund a company like in which is a commodity and which is not good for the environment? That's one thing. So focus on the external environment and see whether your product fits well in that external environment. And again, it comes to the value proposition, whether it fits for the customers or not.
Right.
Secondly, as Gary also said, that you should be able to do your marketing yourself. So the first thing is the pilot project.
Mm,
Definitely companies have to do with the market validation. They should do some pilot project. I've seen
right.
companies where they did pilot project and they found that, okay, the product is workable, but they have withdrawn or they have stopped their apps or their websites, and they want to do something more. And one reason that they gave was, oh, our product needs immense amount of marketing effort and a lot of money to be spent on the marketing, so we cannot go ahead without doing marketing expenditure. So I suggested to them, while mentoring them, I suggested, why don't you generate some side income, right? So if it is, let's say, you can provide an additional service where you can get some advertisement money, and then use that money for spending it on your marketing strategies. So those
Mm,
are the kind of things which the businesses, they forget, like going out yourself and trying to make alliances so that you can get some side income through that. The businesses who are able to generate that income and survive themselves, they are the ones who will be the strongest foundation, and they will
mhm.
survive or being sustainable in the long run. Thirdly, the confidence of running business, that is what I mentioned earlier also, that
Yeah,
if
someone also mentioned there in the chat box a lack of confidence in a global phenomenon.
yes,
Yeah,
exactly. So
only the
that,
right spark can set you right.
yeah, so founders, they think that the idea is good, but they do not have confidence, or they are not committed to that, to their own business idea. So that's one thing. And as far as the business ideas are concerned, for example, the product itself, whether it is a social angle or innovation angle, I've seen projects getting rejected because there's too much of social focus. As Gary mentioned, that returns are important, like, have you generated profit, have you generated revenue before you actually launch? So profit and returns are also important for the investors,
Right.
unless you are taking your project to philanthropic organizations and impact investors. But impact investors also, if you they
Mm,
are there are different types of impact investors, right? So some
yes.
impact investors, they expect returns. So if you think that you have too much of social focus, it will be rejected by the investors, because they are looking for money, right? They want to invest. So
Yeah, yeah, oh, yeah.
and let's
That's,
say if your product has got too much of innovation and you think, oh, my strategy or my technology is brilliant, and it's going to do wonders and things like that. Okay,
yes.
it will take time. It
Mm.
will take time for the people to recognize that innovation, recognize that contribution. So you have to, like for example, Gary was just sharing with us the Maya, right? Maya, this thing. So
Mm.
these kind of technologies, when they are there, it takes time for the people to recognize the benefits of it. So for the investors, if it is a
Mm.
very niche kind of innovation,
Mhm.
it will be difficult for them to accept and to immediately the investment. Maybe you will have to do follow-ups and keep on contacting them and explain about your own business, about the product itself.
Mm.
Next, one project, we rejected, at least I rejected, was it was about a biotech something, but we rejected because they were saying that, okay, we will raise this product and we will sell, we will take out the money for some this thing, for ourselves. So
Mm.
why are you raising money then, right? You can straight
Mm.
away don't put efforts on the product, right? You just sell it right away. Whatever research and development you have done, you sell that research. Why are you putting so much of effort and focus and all this and raising money if you're not putting your own money also?
Mm.
So because investors, they want clear cut return at the end of the horizon period, whatever they have. And
Right.
if during the horizon period you have no plans to do the business, why will they invest in your business? So
Right.
that is one another thing which I wanted to mention. And yes, so one more point is that when they raise investments, when they
Mm.
raise money, sorry, financing, they sometimes ask for too much. So if the project, like I received a pitch deck which was about it was about an educational institution. So
Mm.
if it was a face-to-face education institution, the
Mm.
company was asking me for about $7 million. I said,
Mhm.
for what do you need $7 million, right?
Mm.
For what reason? Because if you are going to do business as let's say if it's a face-to-face tuition center or an education center, what you need to pay is the rental at the most rental, and the nowadays the rental rooms also come with infrastructure, right? So
Mm.
teachers are part-time in adjunct. You talk about any Singapore college, very few colleges have full-time faculty. All of them work on adjunct model, right? So adjunct faculty and all other resources are like on revenue basis. If you're earning revenue, you need to pay, otherwise you don't have to. So why do you need that $7 million for? For what
Yeah.
reason?
Yeah. It has to be a realistic figure. I know. Yeah.
Exactly.
Yeah.
And I've seen companies, first asking for let's say $1 million. Then if time lapses, then they say, okay, let's do 500,000. And then after
Mm.
that 500,000, then they say $30,000 also okay.
Mm.
So you have to be very, very concrete in terms of what you are asking and for what you are asking. It has to be very, very clear on day one. Why
Mm.
do you need money? Because if you have projected your employee cost, it should be there with you. If you have projected your marketing strategy cost, it should be there with you. It has to be very, very clear before you put the ask in the pitch deck. That
Yeah.
is a very important point. And then the dilution part, if you're
Mm.
diluting too much out too much, then it will be a problem for you later, right? So your company, your control will not be there. So
Yeah.
one
You,
advice will be to not to dilute in the first initial stages.
yeah. You. Yeah. This is the next question I'm going to ask about the share dilution part. Many startup actually ask, how much should they dilute, to raise capital? Is 20-30% a good gauge, or they should dilute 50% of the shares equity? So I think how the startups structure the initial capital is equally important. Otherwise, if they dilute too much, then they can't offer the next round. They move on to the next round, then they really have lose control of the company already, isn't it? Right.
Exactly.
Yeah.
Yeah,
So this is something that in this BC acceleration program you will be teaching them, isn't it, about capital structuring,
exactly.
restructure. Yeah. Yeah.
Yeah.
And,
So
and you mentioned about the startup. You do expect them to commit some minimum investment. So what kind of investment is the standard here before the VCs will look into the project? Because some startup totally they have no initial pay up capital. They start fundraising from zero. Yeah. So what do you all think? Should they have
basically,
committed
there
at
are
least 10% of the capital or what?
No, I cannot specify that percentage, but it is upon the idea, because some ideas get funded even without the investment from the founder. That
Mm.
is, I'm sure Gary will also agree to that, right? So initially, if the business doesn't have, like, if you do not have your own capital at all, then incubators and accelerators are a good source. Like in Singapore, we have enterprise.sg, right? So that is where, and a lot of government based or accelerators are there. Like in India, we have IITs where there are, incubators. A lot of people get apprehensions, they are apprehensive about going to the incubators because they don't want to work under their supervision. But understand one thing, that you will get funded there. So good ideas get funded under incubators and accelerators. That is one place where they can get initial funding up to, let's say, $50,000 or $30,000 and so on. So once you build that, and if you are another kind of business where you have some savings, then it is very good to do bootstrapping, because that becomes a positive thing. As long as you can bootstrap your business, you should do that. Bootstrapping can be done in two ways, like all your previous savings you can bring, but other way is to generate side income. Okay, so I definitely, I would emphasize again and again on side income when you are a startup. So generate as an more and more side income by using the same product or by using some other services. I can relate to that, my own business as well. So my company, I'm funding it through my lectures, right? As you mentioned, Janet, that I'm a lecturer as well, right?
Yeah.
So I
Yes.
fund my company through the lectures that I give. So
Mm.
it is like that. So if you generate side income, you will be able to put money in the startup, and then that grows, that keeps growing, so that tree keeps growing. So that is another way to do about funding. And then once you are in that stage where you can approach the angel investors, that's the next level. Then your product at least should be reach at some prototype level, or you have tested it out. Then angels will be interested in the business, and that's how the funding keeps increasing later on with the different sizes and different types of investors as we move along. But definitely, yes, the dilution should not happen to max, like to 50% extent. There are some incubators where people, they come as tech founders. We are aware of, and they fund the found they actually fund the technology. So they develop the technology for you, but what they do is they provide 50% of the technical stuff, 50% of the capital involved in the development, but overall shares that go to them is about 10 to 20 to 15% or so. So that is where it's up to the founder how much they want to look at and what is their strategy. But most people who are raising series A, or let's say 1 to 3 million or 3 to 5 million, they would dilute about 20 to 25% of their equity. That's what I have seen in the
Yeah.
in the founders decks. Yeah.
Henry, is it the same in the US space?
Yeah, I mean, so
Mm.
so a couple of things. One is obviously the founders want to have the least amount of dilution as they can, because what the the paradox, the entrepreneur's paradox, is that what happens is they end up getting to a point, if they dilute too much, that they've got just a couple percent of their own company and they're working for somebody else.
Yeah.
And so that does happen. So
Mm.
now the key is, how do you avoid those situations? Number one is, look at the rounds that you're going to raise and make sure. What I see a lot is not that people ask for too much, they don't ask for enough.
Oh,
And
okay.
and the reason they don't ask for enough is they don't understand how to grow their business. They don't understand how to go global. So asking for the right amount, because you don't want to get into a situation you've got to come back to the VC pool again in a few months, in 6 or 8 months, and say, listen, we've run out of money. We need more money. Well, if you do that, you're going to get ratcheted up. You're going to get in a position where you're going to have to give up so much more of your company just because you didn't look at your business the right way. So make sure that you're forecasting the right way. And in terms of the states, there's another opinion here. And the other opinion is, from my perspective, I don't want to get into a situation where the founder does not have enough percent of the company, big enough portion, because I want them to work. I want them to be incentivized to do a good job. I don't want them to get into to feel they're an employee and start slacking off. I want to help them. So the investors need to understand that if they do try to ratchet them up, that they're going to put themselves at some point in a bind because they're going to say, well, it's not my company anymore. I don't own it. And I only have a little bit. So
Mm-hmm.
investors, be wise with it. So, but what I'm seeing is, there's a huge trend that's taken place. In fact, I wrote an article called Nikola Tesla's Dream Comes True, the democratization of opportunity. We're in a very, very special time, Janet, a very special time. So, I know here we've got Singaporeans, we've got Australians. I deal with Africans every day, Europeans, Americans, but we've now changed the playing field. Now the access to capital is a lot different than it used to be because we are using Zoom, right? We're using Microsoft Teams. The investors now are feeling much more comfortable and make an investment without ever having met somebody. Now, that's not to say if you have people within your team that have contacts, it means there's trust and credibility. Trust and credibility are very, very important. And I can tell you, doing 16 to 20 events every week, every single week, I'm on the line multiple times, and I can't tell you how many times I've heard other VCs say to me, Gary, if you bring an opportunity to me, I'll listen. But I have so many people trying to get me to look at their decks. I don't have time. They're like inundated. So they just forget about, if they see a nice name, they check it out. But what it is, it's really, if you look at, VCs, it's really like it's like a fraternity. It's a very tight knit group where they help each other, right? They bring each other into deals. That's how it really works. So at the very highest level, hey, I got a deal. Maybe you're interested. I've got a Twitter, or I got a Facebook, or I got, a WeChat. Why don't you take a look at it? That's how it works. It's a very tight knit community worldwide.
Yeah. Yeah.
Very interesting.
It's
And
about it's about relationship, isn't it?
I totally
it is. And I've
Yeah.
raised, so I raised $7 million with no sales,
Mm-hmm.
none. And I did it in 4 months. So I can tell you directly it can be done, but I had to use my contact network in order
Yep.
to be able to do it. I then raised another $2.5 million without any sales. I had to pivot the company 3 times. And now we've raised, over $20 million in that particular situation. So I can tell you it can be done. It's a matter of being able to, get to those people. Part of the situation I've been in Silicon Valley for 35 years. Well, imagine who you know. It's I go to Starbucks in the morning on a Saturday, and Tim Cook has his coffee at 6:30 or 7 o'clock at Starbucks because he works out at the gym across the street on El Camino. So, I mean, you just have access. And Mark Zuckerberg goes to the Chinese restaurant I go to. Steve Wozniak goes to a restaurant in Campbell, California. He likes ribs, and I see him in there on Saturdays and Sundays. So, I mean, it's really good to build up your network like that, to hang around Stanford University, to go around where the people are. Because what happens is you start to build your network, and you need a trusted network. The whole idea of getting funded is about trust. Do they really believe that you can pull it off or not? And if they don't believe it, they're not going to invest in the company.
Yes, I truly agree with you that in this VC world, this space that is all about relationship, trust, and the network, which is why we are here. I mean, the projects must actually know how to tap onto our network, by joining us. So sometimes that is a fee to pay, no doubt about it. Because even when I spoke to some US VCs, they do ask for some retainer fee in order to work on the projects, and so I guess this is already uh, a kind of structures, for VCs to help project into fundraising. And this is the cost of fund that I encourage all projects to actually budget in your forecast. You have to set aside some funds for to get funding, the cost of funding, and maybe another 5% for sales marketing, or usually we set aside 20% for marketing, right? So I would advise them to set at least 5 to 10% for the cost of funding, for you to reach out to the VCs, and even to the investors. Yeah, because all this come with a cost. It's not really FOC free, Yeah, of course, if you can get free, try to tap into the government funding, the grants, and the network first, before you come to talk to the VCs. Yeah.
What I
Okay.
was going to out is that it's really important today in this world has totally changed in the last year.
Yeah.
And with this, COVID and in the U.S., the rates are going dramatically up. So it's not like it's the pandemic's over, right? We say we got a vaccine, uh, et cetera, but we're still in this incredibly new world. In a one way, the companies that take advantage of it are going to win because it gives you access across. I can't, it's amazing the kind of people I've been able to get to. Last week, I got a note from the CEO of Intel, Bob Swan. It's just incredible, actually, just across the board at the very highest levels. But this phenomenon is not going to exist forever because once people start to figure it out, it'll slow down. It's critically important for the startups to be looked at as thought leaders, to write. I write now, I'm writing 3 to 5 articles every week myself. You got to be out there, you got to get visibility because that visibility helps breed the trust too, because people look at you as an expert. So if you're a startup in social media influencing, go out and write articles about how the power of social media influencing and how this revolution is going to make a dent in the universe. If it's for supply chain, look at the supply chain right today.
Right.
And we talk about quantum computers and we can't get toilet paper. Now, what's wrong with that picture? you
Mm-hmm.
know, so
Mm-hmm.
how so the supply chain, you need to paint vivid pictures too. Your words need to be pictures. Just like I said right now, I compared it to the supply chain with toilet paper and people understand. You got to make people feel your words. It's really important. So as you're going down through, it's important for the startup entrepreneurs to make sure the marketing material is very crisp, concise, and interesting, right? And not boring. I've seen PowerPoint presentations. They're so boring. They look like they're research. You've seen them too, right? They look like the research projects in a PhD program. And you're
Yeah.
like, hello? I mean, what's the point? Tell me where your product is,
Yeah.
Um, and the thing is, you want to start out with is I had Bill Reichert on my show. I have a show, actually, the top show in Silicon Valley is called GSD Presents. And I had Bill Reichert, I had Guy Kawasaki on recently, and Bill just wrote a book called Getting to Wow. It's really important that when you speak to them and you have your wow statement, that it catches their attention and you grab them from the heart. So you need to make sure you're building your presentation that it's on one side entertaining and the other side filled with facts and how you're going to solve the problem. And
Right.
revenue. If you have revenue today, so a startup, we look at startups that have for GSD. My company, by the way, is GSD. It's Get Shit Done Venture Studios. That's the full name of it. And
Okay.
and that came from Mark Zuckerberg, by the way, because
Uh-huh.
Mark Zuckerberg's term, he says get shit done. And I said, this is a great name for a company because that's really what it's all about, right? Everybody talks, but the one that gets shit done, they're the ones that are going to win. So make sure that revenue is important. So if you bring revenue into me and you've got $250,000, $500,000 worth of revenue, I have a really good feeling that you're going to be successful, especially if you're in a place like Singapore or Australia or Africa. If you do that, it means that your team can work together and get something done. And it's really becomes very, very interesting. Of course, you want to make sure there's potential profit at some point. You want to make sure that your expenses aren't out of line. But if you got revenue, it catches my attention.
Okay, wait. Okay, let me see how much time we still have. Okay, we still have about 20 minutes before the project showcasing. Right, next questions is about the valuation. Always startup are facing you know, the struggle of setting the right valuation for the business. And in fact, in the marketplace, most people actually use 1 million as a benchmark, for to actually to gauge the startup. Do you agree that 1 million is the right valuation, is a benchmark that we should be using to measure a startup universally? Or how do you measure valuation? Maybe you can, can talk a little bit on the valuation part to share with our startup here.
Okay,
I
I'll,
mean, go
yeah,
ahead, go ahead.
it's fine, you give.
Mm.
I mean, the situation with valuation, and again, I'm a country boy from Pennsylvania, so I always keep things simple, right? I'm a simple guy, grew up the side of a mountain. So when I look at valuation, you can't say $1 million is it, because a blanket statement like that, it's not going to look right. A VC is going to
Mm,
look at it and think there's some BS in it. Let's look at it. So look at companies that are comparable to yours in the space where you can draw some conclusions. Look at where they got funded. Go to angel lists, go to different sources. What was their valuation where they got funded? And then you have a benchmark to be able to justify it. So
mm,
if it was me, that's what I do, and that's what I expect the companies I work with to do, because you want to make it real. That if you set the stage, Janet, and you come up with something that's either too low or too high, instantly what happens is the people don't believe you, right? You start off with uh, people doubt everything else you're going to say in your presentation. So figure out, how did you come up with this number? Well, let me tell you, angel list for the last 5 deals were done in our space. This is the average that took place at the same stage at what we are today. And these are the reasons we can justify being a little bit higher than them based on our artificial intelligence. I'm making it up. Our unsupervised AI that focus on this, and our customer acquisitions are at double the rate that what they are.
mm.
So, and we're raising the money for growth capital. Hello, you've
Okay.
got a problem solved. But if you say, well, it's $1 million, how did you come up with that? Well,
Uh,
because people told me that's a starting point. They're going to say, come on, give me a break.
mm. Okay. And
And I
Lisa,
agree to
yeah,
that. Yeah,
yeah.
I agree to that. That 1 million is not a benchmark which these startups can look at, but
Mm,
what they can look at is that how good is their idea, first of all, the opportunity, because that's if it is a, like, let's say, a brilliant idea, then with that idea will come the risk, and the, with the finance, what we look at, risk and return go hand in hand. So if the investors are taking risk, they will also expect the returns there. So
mm,
when I teach also finance, I say, okay, what qualities does your startup have? If you do, you have organization structure in place? That means, do you have a team, that which Gary mentioned earlier, that do you have the team, do you have co-founders who are strong enough,
mm,
or good qualified co-founders? That is one thing. Second is the business idea itself, and then you go ahead and keep on adding the positives that you have. So if you are in a good geography, good business, good market, then you add more, right? So let's say if a startup is based out of China, so China in, or let's say now Indonesia and Vietnam, they are also very good markets, right, for growth. And India also is like there. So if the startup is based out of that, or let's say on the other side, as Gary mentioned, that if it is a startup based on AI or a new technology, then that will grab attention of the investor. So in Silicon Valley, what I understand from what I go through the reports and all, that they place value for each factor. So which is the
mm,
management, then they place, let's say, 200,000 there. If it is a good idea, then they place another $200,000 there, and so on. So they keep adding. The maximum investment that they do in the startup, which on an average, the median one comes out to $1.5 million. But that is the maximum, and that also in Silicon Valley. So if you look at that place and if you compare that to Asia, so I would assume that the first round of startup after the accelerator and incubator would should be the angel investor round between 300 to 500,000, nothing more than that. But if you can sustain that and grow that money with the revenues that you like, I would not even fund those starters which does not have revenue at even at 300,000 level. So some revenue should be there. So with that, if we go ahead, that is the angel round we can achieve. But 1 million should will definitely cannot if the business is, yeah, if the things are not in place, right? So initially you cannot ask for 1 million because you have to show that growth and trajectory, right?
yes. Okay. Truly agree. All right. There's a question here for, I think it's Gary. What are your prediction for US-based angel investor behavior in 2021?
So there's a lot of
Um,
there's a
excuse me.
lot of pent up demand. I'm dealing with a lot of very high net worth individuals that are friends or have family offices. I'm actually dealing with them directly, and I
Mm,
can tell you that there's a incredible amount of interest in artificial intelligence. And I just did a panel in Europe on artificial intelligence and drug discovery. Not a lot of people know that Pfizer's vaccine, actually the top three vaccines had a lot of the work had been done in AI models, not in bench time. So we're in a new era. And so they're looking for technologies, they're looking for investments, specifically in AI, and the valuations are quite high. The multiples can be 15 to 20x.
Mm-hmm.
So they're active. It's just finding them. It's all about finding the folks, right? It's not that the money's not there, but it's like treasure hunting. You're trying to find the people that fit the space, people that have interests similar to yours, that are active, um, and that have funds that are their own personal funds are deploying. I think actually it's a very very good time if you find the right folks.
Okay, sure. Okay, before we roll up, I guess there's a common question a lot of people are asking me, when they embarking on a VC accelerator or incubation program, and they're asking for whether can we guarantee them with the results, meaning find investors into the projects. Do you give the kind of assurance or guarantee to your projects, to your incubating, I mean, or even,
Are
yeah,
you asking me or?
yeah, your
Yeah,
program?
I mean, the situation, there's no guarantees in life because you don't know it's like, I don't know if you ever seen the movie Forrest Gump. It was an old movie, but he said one time, life is like a box of chocolates. You never know what you're going to get. And the
Mhm.
situation is there's no guarantees because you don't know what's happened. The only thing I've created $2 billion companies, so I think we've been pretty successful doing it, and we've raised hundreds of millions of dollars. So I think at a Nasdaq IPO. I think we got a good shot, but it's based upon how good the technology, the same things I talked about earlier. Do you have a good team? How
Mhm.
good is the technology? Do you really have the right stuff to go global or not? Some
Mhm.
people talk about it, Janet. They say they can do it, but in reality, they can't. And what do the VCs look for? They're looking for companies that have $1 billion unicorn potential. That's it, and they're looking, are they going to get their money back, and what are the multiples of getting that money back? It's a simple equation. So in terms of guarantee, there are no guarantees. The only thing I can tell you from my standpoint, so we have two pieces within GSD. We've
Mhm.
got GSD Labs, which is like a post accelerator. So
Right.
I look at it three stages. You got the first stage is acceleration, the second stage is regional dominance, and the third stage is going global. Each one of those stages have hurdles. But in the
Mhm.
third stage of going global, especially now during the pandemic, it's not so easy because if I'm in Singapore, how do we get to a place like the US? If I'm in Africa, how do we get to some place like Europe? It's a matter of the connection and the credibility, as we talked about. So, what I can tell you is that I personally, in terms of my own network, I have
Mhm.
about 347, 350 VCs that I talk to regularly. And, every day I'm on myself multiple panels, VC panels, and I can be, I average 16 to 20 a week. So can imagine who you talk to. So we're active doing it. So we know who's investing in what. Every group from SoftBank, Coastal Ventures, Andreessen Horowitz, Battery, um, family office like the Wimmer family, Peter um, um, Richard Branson's partner, Per Wimmer. I mean, all across the world. So we're dealing with them. I've raised money from Israel, from Russia, from Europe, from the U.S., from Chinese, from Foxit in China, Pi Hong Chen, who's one of the original investors in Sina in China, just different folks like that. So we have a wide network. The key is who have the access and who has visibility and who do people trust. And do we like your project? So we put it in two phases. One is we call it the uh, GSD Labs, which is really a global post acceleration program, and then
Right.
GST, which is our group. We have portfolio companies where we take active roles in those companies. So we'll take operational roles and basically stack the deck. So the probability getting receiving funds is really high. So many times I'll take an executive chairman, CEO role. My partner will take a COO role. I'll bring in my chief strategy officer, Sometimes I'll bring in the former chief security officer at Apple. I could bring in the former COO of places like Walmart. We stack the deck. So when it comes in, it's a 360-degree view and it's fundable. And we're sure the financials are right. We're sure the legal structured properly. It's ready to go. And it looks like a company that's ready to be $1 billion.
Yes, sure. So we actually land the project summed weight in terms of the team structure, right? If we see that there's a lack and in a gap in this area, right? Yeah,
Yeah,
great.
exactly, because that's where it
Yep.
comes. I mean, the thing is there's incredible technologies out there, but the thing is
Mm-hmm.
you've got a 22 or a 24-year-old that's never done it before, and it's hard
Mm-hmm.
because now you can't even get on a plane. How in the world are they going to get the word out to the valley and have I'm not saying not just the valley anywhere, but it's hard to get that word. I'm not saying it can't be done, but it's really not so easy. If you have the credibility and you have built those kind of companies and you're known for doing it and you're an investor, it works. And so what I suggest is that you want to use it's like simple. You trust your friends. So if you got friends that do an intro to somebody for you, you're much more likely to cut a deal. The same thing with raising money.
I would
Okay.
also,
Yeah.
Janet, I would like to add one thing here that, the VCs or the investors, whatever stage they are in, they, even if they have a broad mandate or broad strategy, but
Mm-hmm.
they're within that also keeps changing according to
Mm-hmm.
the situation. So
Mm-hmm.
let's say a VC will say, okay, nowadays we are investing in deep tech. So we have raised a fund in deep tech, but in deep tech also they will keep modifying their priorities based on the current market situation. So it's very important, and that those things only internally, people who are connected to the VCs, they will know. Unless you are connected, they will not let you know, because on their websites, if you go and check, they put a broad mandate and they all or they just put a broad portfolio of their companies. So
Mm-hmm.
very hard to determine whether their fund is open and how much they are investing, or what is their interest at present. So it's that is where we contribute as the middle advisory, you can say.
Okay, great. I think we only have few minutes. There's the questions here from Ismail. Maybe is addressed to the panelists. What is more important to gain investor confidence, technical innovation or business model, assuming the venture is pre-revenue? Who would like to take this question? Technical innovation or business model?
Are you asking me or yeah,
Anyone?
I mean the situation. So I mean it's a combination of both, right? It's
Mm.
like with one you don't have the other. If you don't have the technological innovation, and you got a great business model, you know,
Yeah, it
well,
seems
it's
like.
like going out now. It's like buying a Ferrari without an engine.
But I think it starts with design thinking, isn't it? You need to have the innovation before you can move on to the business model,
Well,
right?
I mean, it's like I said, it's like you buy a
Yeah.
Ferrari and you want to take it on the track and you don't have an engine on it. Hello, and
Yeah.
then the other thing is if you have an engine without a
Yeah.
car, hello, you know what I mean? It's like
Yeah. So
it's
it's
a
one lead to another.
I
Yes.
think that's what it's
Yeah.
all about. It's about, the
Yeah.
Germans have a phrase, gestalt, the
Yeah.
sum of the
Yeah.
parts equal the whole. And the
Mm.
situation is you need to have a little bit of each, but you don't need to be, it's not necessary that you're the first person in. Look at
Mhm.
Facebook, right? And Friendster. So it's about having the, and many times, by the way, the company that has that first innovation
Mm.
loses because they have to educate the market. It costs so much money to educate the person that comes in second wins.
Mhm.
So you have to be, understand that. So, what it does is it makes you understand if you follow the leader like that, you understand what the pitfalls are going to be and where you can pivot, right? So you don't make the same kind of mistake. So, yeah, it's a little bit of both. I mean, from my standpoint, you
Yeah.
can't have one without the other. You can't have the car without the engine, and you can't have the engine without the car.
Right.
I would like to add
Okay.
one small thing here, that if the business does not depend on the technical innovation, the definitely business model has to be there, right? So yeah, so if the business is, let's say, if it is any other kind of service, if it does not involve the technology part, if it is
Mm.
whatever it is, whatever type of service, then definitely business should be able to earn revenue, and the business model should be clearly specified in the pitch decks they are presenting.
Okay. Now it's 8 o'clock now. We have 3 projects here that they are going to showcasing their project, and after that we can comment a little bit on the projects for this from this is our next segment that we're going to do. Andre, are you there? Andre from FD.
Sorry,
Is he there?
what's his name?
Andre Lee.
He's here. I see him here.
Yeah,
He's on mute right now.
Can you unmute yourself
Yeah,
and share screen?
I've allowed you. You can.
Can you unmute?
Yeah. No,
Yeah.
yes, no,
Yeah, you are the first to go.
Alright.
Okay, let me just introduce a little bit about your projects. Yeah, Andre is actually presenting a memory boost games app to fight against dementia. It's more for dementia patient, right? To boost their memory. Okay, Andre, you take over.
What's wrong? All right. Good evening. My name is Andre. So basically, we identified the problem of that a lot of people they struggle to memorize things. Their memorization difficulty. So how many of you, like example, you try to remember things, then you find things to be quite difficult, like in school, or doing or while you're doing a pitch deck, then your brains sort of freezes. So what we do is that you want to make things easily accessible, efficient and easy to use treatment. Because a lot of people they do not know where to find the treatment. And currently, there's not a lot of infrastructure and no platform adapted to patients' needs. Like you go to Google and Apple, Android, you find lots of apps, but then you may not know that it really works and all these things. And basically, for market size, right, we target a few markets. First, we target the memory improvement market, which is for 60 years and above. And then we also target the memory hack market for 9 to 22. So it's a 112.14 billion in 2018. And basically, you see on the right.
Your screen is not changing.
Oh, okay. That's strange.
Move down.
Yeah.
Yeah, I think there's some.
It's not full screen though.
Yeah, trying to make full screen, but there's some technical issue with the Zoom. Let me try to do the stop, then do it again. Sometimes it happens. So.
Yeah. Okay. It's better now.
Yeah.
Yeah.
Okay. So so basically the number of people in the dementia is steady rising, as you can see from the graph there. And so what we did was that we came up with a solution. We came up with a FD platform. We just came out of a development this month for the beta version. And so we target to enhance memory, and we also target to manage dementia. So dementia in the world is that worldwide there's around 50 million people that have dementia, and nearly 60% living in the low and middle income countries. And there are nearly 10 million new cases, and the proportion of them are age 60 and above, and already 5 to 8% already have dementia. And total number of people with dementia is projected to reach even more in 82 million in 2030 and 152 million in 2050. So much this increase is attributable to the rising numbers of dementia living in low and middle income countries. So basically, it's becoming quite a costly issue to the society, that costs 818 billion USD, and the total cost as proportion to GDP very from 0.2 in low and middle income countries to 1.4 in high income countries such as the US, UK. So let me talk about the global memory market. So basically, we are backed by the there's a lot of especially in Asia and around the world, there's a lot of demand for memory market, and basically the world's older population start to grow at a unprecedented rate. So we're targeting the cognitive assessment and training market. So basically, the user experience that you can download the app from our app store, and we can learn, play, and monitor the app. Then some of the apps there's a test. You can have a test on the app, and you can improve your brain. So what we did is that we partnered with some of the leading players such as Brain Time from US. The app is quite good. You don't need specialized hardware. You can just use a normal headphone that you can find on your handphone, and then you can get to see it work, and you can let it energize your mind, make you more focused. So let me go on to the technology framework. So basically, the developer builds a game using our AppD API, and then you will submit the developed game to the store. And what we do is that our CTO and technical team will evaluate the game, and then only upon approval, then it'll be published on the store. Then once the game is published, you can download the game and register it on the AppD user, and the user can now play the game using our AppD tokens. And the developer can start learning benefits when user play and use their app. So right now we're also developing a affiliate model because we believe, as what you guys were rightly saying, that we plan to create some revenue for ourselves starting from next month. So this is our business model. We have the FD store, which I mentioned just now. And next, we also target like public users and gamers, like using online marketing and media and all this. And later I'll show you our pages. And then we have online training courses, which we already started marketing this month, and schools and tuition centers. Because at the beginning of before COVID, we actually wanted to do more of like physical training, but that is not very possible. So we decided to concentrate more on online training courses. And what's the difference we have compared to other competitors is that for us, we have online training and offline training, and we have secure transactions, and we also have app developers and recyclable tokens. Whereas other guys like Bain apps, Bain app platforms, they only have like they only have like two advantages, or have only one advantages respectively. Yeah, so let me go on to introduce the management team. This myself, I'm been involved in service space. Then I was a director of sales in multiple companies, and basically I also involved in two well-known blockchain companies such as Simpin and Homeblock. Simpin, our team, we managed to raise 50 million USD. Then my chief operating officer is Dr. Sundas. He's a specialist in dementia and Alzheimer treatment. And we have our CTO, Prasanjit. He has done a lot of mobile apps developments, and our CMO, Brian. He's a recognized advisor in crypto marketing and does a lot of online marketing, like this works with like market stars and all these things. Then we also signed a partnership with Memory Master, Nissan. He has been featured with on Guinness on the news, and a Guinness Book of Record holder. And it's featured on Channel News Asia, ZTV, and Masantan. And it's quite a lot of MNC clients like Petronas and this Toto and all this. And of course, we have board advisors. We have Janet, so I won't talk so much about it. We have Richard Trummer, Lex Luminov, Murtaza was a marketing advisor, and we have Berhad who advises on the smart contract implementation. And we also have Lim Yak Kim, who's a business advisor. And we also have our public relations advisor, So Wang Wei, who actually was involved in a Japanese project that managed to raise about 50 million, and she handled all the public relations for them. So I'll go to marketing strategy. We SEO, SEM, social media marketing, website, direct email. We also have blogs, and right now we are building our referral system. We have print advertising and word of mouth coverage, and we also plan once the COVID is over, COVID is actually now getting better in the sense that we in Singapore we can hold start to have events. So we plan to attend quite a lot of events, both online and offline, next year. And these are proposed partners that we believe in our solution. So we are thinking to about as many as 50 ad companies. So these are the online courses that we are marketing. We have a supercharge your memory power, and we have a 2-day workshop, super memory and study skills, 2-day workshop on boost your brain power, and one-on-one coaching. So what happens is that we also have a overall assessment for brain rehabilitation program, and we do testing at the clinic. We also handle detox programs and nutritional assessment and postural neurological programs. We're available at the following social media. And basically, we signed a MOU with the Alzheimer Association of in Singapore. So we're already talking to them to do some training program and some treatment. However, that has been delayed due to COVID, so we haven't started yet. So once we started, we would have foresee to have some revenue. So
Okay.
I come to the end of my presentation.
Okay, so Dr. Nisa, do you have any comments for him and Gary?
Overall, I really like the presentation and the things that you do have a good team, you have advisors on board, you have put on all the marketing strategies in place. I would like to know so far, like you said, you'll start generating revenue later, or it's already like you have revenues.
No, we haven't earned the revenue yet because we just finished development.
Okay.
So we have to do a lot of testing and all these things. So we only finished just this week actually. We finished the development for the app store. Yeah, and also for the smart contract. So we already started marketing our services to and as I mentioned because our partnership with the association it was delayed because I mean they already signed a agreement with us, but we haven't go to them to start selling our services because right now COVID because of the social distancing and all these things. So we foresee that by next year we will start to have some revenue.
Okay. And are you targeting that similar such associations you will get in touch with, and that's how you'll market your programs in future as
Yeah,
well?
that's right. Actually, I was halfway in talks with a similar association in Thailand. Because I have a quite good connection in Thailand, and actually my friend is the president over there. But the problem is that we did have a Zoom call with them, but we can't go to Thailand now because of the COVID. Yeah.
Okay, I think Nisa, you have to unmute Gary. He's muted.
Yeah, I'm unmuted
Oh,
now.
okay. Yeah.
Thank you.
It's now I see Sammy. Yep. Any comments from you?
Yeah, I mean, the situation is, I think it's interesting. I'm a clinical psychologist too, so I know a little bit about it. And it's interesting. It would be, have you dealt, who you dealing with today? Have you done any pilots or anything at this point in time? What
Yes,
have
yes.
you done?
Because we have actually done some pilots based on because my chief operating officer he has a clinic, so basically he already used all the treatment has already been used on people already. He has like
Yeah.
about I think more than 15,000 over clients I think.
And but have they talked about they're willing to pay you for this? Have you gotten anybody saying that they're willing to at some point buy it? Have you gotten any MOUs or anything like that?
No, because right now we treat individuals, but we have a MOU with association, so we are
Do you have any letters of intent? Anybody saying I'm willing to buy this? I'm looking for somebody to just prove that it's right. I mean, the one thing, Andre, you want to do
Mhm.
is you want to get funding. You want to make sure you can get some customers that actually want to buy it,
Okay.
because what it's really difficult is that there's too many uncertainties unless you have customers.
Yeah,
Because
that's
I
right.
don't know. I think it sounds great. I mean, I know that Alzheimer's and dementia are problems that need to be addressed, especially with an aging population in many parts of the world. right? There's 70 million in the U.S. baby boomers, so it's a great market to be in, and but the key is, are people willing to spend money, or is it just, and how effective is it, right? What do the studies show in terms of the effectiveness? So what's before and after implementing this, how much better are they? What percent of retention are they better? So those are the kind of things, not just I think the idea is right, but I would want to know the facts. And then if you could show me people are willing to spend money on it, then that changes everything.
Okay. Yeah. Basically,
Okay.
what I do is I can improve
Yeah.
the how to say the tech further. I put some case studies of existing people who are using and paying it. I think that would be,
Okay,
yeah.
you want to have that. You
Okay.
want to just have one or two. You need to have, 100 or 500, something that shows that people are really interested in using it and paying for it. And then testimonials. What kind of responses? If you can say they've increased their short-term or long-term memory capabilities, short-term memory capabilities by 30% or 20% or whatever, it could be really interesting. And
Oh,
then just something like that, and then it makes it a whole lot easier to get people funding you because they understand that it's based on fact.
okay. Yeah.
Okay. Okay. We have to move to the second
All
speaker
right.
already.
All right. Thanks
Right.
for the feedback, Gary and Colin. Yeah, it's
Okay.
appreciated.
We have the second projects here is called NGF, and the speaker is represented by Dr. Nguyen Dio Viet, right? The chief scientist of NGF, and NGF is a biotech company into preventive neuromedicine and what do you call revolutionize drug screening and personal medicine. Sorry for tongue tie. Okay, yeah, you can take over.
Hi, everyone. Can you hear me clearly?
Yeah.
Yes.
Good evening, everyone. I'm very pleased to be here today. So let me start sharing my screen.
Can you?
Can you see it now?
Yeah,
Can you
yes.
see it clearly?
Yes,
Oh,
yes.
okay, great. Then I'll go full screen.
Yeah, you have 10 minutes too. Right.
Oh, okay, thanks. Yeah.
Okay.
Okay, thanks. Welcome to NGF. Let me see if. Okay. Welcome to NGF. We are pioneering preventive neuromedicine and neurotherapeutic. Some of you may not know the neurotherapeutic term. Neurotherapeutic basically means precise neurotherapeutics for neurological disease toward personalized neuromedicine. So before jumping to our solution, let me share with you a current problem. Every day, our brain is assaulted by many neurotoxins. Stress, alcohol, smoke, pesticide, heavy metals, pollution, they are around us and unavoidable. These neurotoxins are the cause of many neurological disorders: Alzheimer's, Parkinson's disease, dementia, stroke, multiple sclerosis, epilepsy, migraine, brain injury, and neuroinfection. And every year, more than 1 billion people suffer from these neurological disorders. Every year, 15 million people worldwide suffer a stroke. Nearly 6 million die, and 5 million are left permanently disabled. And 1/5 of Chinese population suffers from neurological disorders. And if you look at this number, about 50 million people worldwide suffer epilepsy, and 6.5 million people suffer Parkinson's. 50 million people suffer from dementia, and 1 billion people suffer from migraine. And it takes approximately 12 years and 2.6 billion to bring one drug to the market. Drugs need to go through rigorous preclinical and clinical study involving animal model and human trial, respectively, to confirm drug safety and efficacy. So this study involves high cost, long lead time, animal cruelty, and only one drug for all patients. An animal model may not be physiologically similar to humans. So many drugs have been shown inaccuracy on animal models, which lead to immediate failure in phase 1 clinical study. So NGF brain organoid platform revolutionized drug screening and personalized neuromedicine. For the first time, we can grow patient-specific mini brain in the lab, which allow disease modeling and disease mechanism study and drug screening on patient-owned mini brain to identify the most efficacious drugs before clinical studies. So this patient-specific mini brain from healthy nerve cell can also be implanted back to the same patient to recover neuron loss or brain damage. So this opened a new doorway to what personalized neurodiagnostic and neuromedicine. So with this mini brain platform, drug development cost and time will be greatly reduced by 50%, and less animal testing or cruelty is involved. The mini brain platform allows precise and personalized drug screening, which offer the right treatment at the right dose for the right patient at the right time and for the right outcome. So these are our core technology. I have already mentioned the personalized preventive neuromedicine and neurodiagnostic focus on the mini brain. And the number here show all our patents have been filed. And we also have smart absorptive technology to enhance absorption at the gut level and brain. So if you have the most powerful drug, but it cannot be delivered to a site of action and cannot exert its effect, then it's meaningless. So that's why we also focus on neurosmart absorptive technology to enhance absorption at the gut level and the brain, and also enhance neuronal targeting for high efficacy. We also focus on cannabinoid-related technology, as well as biomolecular engineering for neuronal targeting. So we focus on preventive neuromedicine and neurodiagnostics. So with brain supplement product, we already have the product brain supplement to launch the mass market, and we also have mini brain. It's a drug screening platform that can be used for many drug testing, preclinical study. And with this platform, we work with all the pharmaceutical companies on their drug development, and we are entering this market. So these are our target markets: brain supplements, medical cannabinoid, neuropathic pain, and nervous disorder, with the respective market size and the CAGR. So this is our roadmap. We have incorporated in 2017 and have launched a few products to the market. We have Plan Plus, focused on neuroendocrine function. And we have C-Neuros, focused on brain function. Improvement on memory, cognition, and focus. So in the past few years, we have been developing our smart bioextraction and alternative cannabis and mini brain platform. So we have filed several patents on smart extraction on alternative cannabis and alternative cannabis seeds devoid of harmful compounds like THC. So because we focus more on medical cannabinoid, and we're also in the midst of IPO and prepare for our clinical study next year. So we have launched our brain functional supplement in 2020 and gather quantitative data and as well as testimonials for evidence-based case studies. We're also preparing for clinical study phase 1 next year on neuropathic pain and Parkinson's. So these are our extensive partnership with research institutes, university, marketing partners, and strategic partners, as well as a hospital and health centers. And here are our team at NGF, with Lim Ka-meng, our CEO and founder, who has 20 years management leadership and other experience. Director Joshua has extensive directorship experience in public and private companies. And I myself here have 10 years of research experience in nano micro fabrication and drug delivery. Dr. Timothy has more than 30 years of research experience in biopharmaceutical technology and medical devices. So why should you invest in NGF? We have strong foundation with expensive IP portfolios and technology platforms. We have strong team and partnership. We have established credibility, and we have beautiful technology, globally scalable with multiple applications. And we are raising 25 million for product development, clinical study, as well as a marketing business development. So yeah, thanks for your attention. And I welcome all the questions. Thanks.
Yes, may I know how much funds have you raised so far? Out of the 25 million.
So far, we have raised. So our first private placement is 1.4 million in 2017, and then we have raised like around 500K. Yeah.
Okay. Right. And so your target market is actually also to the those people who has dementia and migraines and stuff like that.
Yes. So we have. If you look at the diagram, we focus on preventive neuromedicine and also neurodiagnostic. So that means for preventive medicine, we have product like supplement, brain supplement or brain food to improve on the like memory, focus, and cognition for the healthy people. And also for the patient, for example, they also can have benefit from the supplement, because this supplement is with the potent neuroprotective and neuroactive compound that can really improve and reduce the neurodegeneration, for example, and slow down the progression of the neurological disease. And also for the neurodiagnostic pillar, we have the mini brain. It's a drug screening platform. So basically, with this one, we can work with all the pharmaceutical companies so that to shorten down their drug development cycle. Because with this platform, you can test on a human mini brain that is more like physiological, similar to human than animal model.
Well, I can see this is a very big market out there.
Yes. So these are the market we are focusing on right now. So they are all like multi-billion market, and our product and technology can really globally scalable.
Yep. Yeah, I understand from Dr. Lim that he has planned to go IPO next year, right?
Yes.
Yeah. And it's US NASDAQ.
Canada and US NASDAQ, yes.
Okay. Maybe Gary can help. Gary, are you there?
Yeah, I mean, the thing is, I've been writing a lot about this, and I just participated in an event in Europe with the top pharmaceutical companies about drug discovery and using artificial intelligence. So, and I just sent out an article I just wrote in Medium about genetics and genomes. So I think that, what you're doing, I'd want to understand it a little bit more. So in terms of the platform, and there's probably not enough time right here to dive into it, but I want to talk about specifically about artificial intelligence and any uses you have of that here? Because I don't see it pinpointed anywhere.
For artificial intelligence. So I think that will fall into the kind of the big data we gathering now. So with this mini brain, our first revenue from this mini brain will be from the biobanking of the mini brain of the patient. So I mean, now patient with this technology, patient can really bank their mini brain for the future drug development, specifically for that patient. And also from this, we can do drug screening and do the disease mechanism study. Then that will require a lot of like data, and also that where we can use AI to integrate with this platform.
Okay, how much revenue do you have today?
So the revenue we have today is because for the last 3 years we focus heavily on the technology development. However, we still have the supplement launching, and our revenue is around 100K so far.
100K of revenue, and you're raising 25 million?
Yeah.
Yep. Because in the last 3 years we focus more on the technology development. So right now it's a time to bring the technology to the next level.
No, I understand. The challenge is, just so you know, you got 100K in revenue. Is that ARR or MRR or what is that? Is that your annual revenue? 100K or what?
Annual. Yeah.
I mean, the thing is, that's a lot of money to ask for something that may or may not be proven. So it's a large round, right? Even though you've raised $1.5 million, it's a pretty large round. So I would be, and then what about FDA approval? You know, just talking about the US directly, do you need to have FDA approval for this or not?
Yeah. So because the technology is the platform. We also have the if you see this, let me go to this line.
I do understand that you already have some patent files, right? So that could be some valuation just that came from these few patents, right? From what I understand.
Valuation, come from the patent, and also come from the market as well.
Yeah.
So and the thing is here, we are like a biotech company, but we also have the product, the actual product that can really sustain our business. So that is the brain supplement is like a lower hanging fruit to focus on right now. But with the mini brain organoid, we want to enter the clinical trial, clinical study for Parkinson's disease and also for neuropathic pain. And also we also into the cannabinoid related technology. With our smart bio extraction, we can extract the medical cannabinoids from the cannabis plant with high purity and potency. So with this, it can be readily plugged into many like brain supplement product, for example. And the cannabinoid market is also very huge. And we are entering Canada. We're doing an IPO in Canada. And so if you look at the market cap for all the cannabis company in Canada, they are like 200 to 300 million. Or it can be up to 50 billion dollar market. And
TSX, right?
Yeah, TSX exchange. So that is just focused on cannabinoid only. In our company, we have cannabinoid related technology, and we also have the drug screening platform, which allows us to screen the most powerful cannabinoid compound to treat neurological disease. So that is the game changer here for our technology.
Okay, I guess we can talk further. We're running out of time. Can we have our last projects by called Quick Loan by Mr. Jamal Akhtar from India to share? some insight. I think Quick Loan is a credit scoring analytically based digital personal loan marketplace platform for new to bank customers. Yeah, Jamal, can you take over? Yeah. Thank you, Viet, for your presentation.
Thank
Jamal.
you, Janet. And thank you very much, Gary and colleague. And it was lovely listening to Gary, first of all. After graduating from a startup boot camp, I had a first person who I've really heard talking about customer development and other things, which is very useful, very pragmatic, and it will be really, really useful for my rest of my journey.
Yep. Are you able to share screen?
Yeah.
It's not changing.
Allow me to. Yeah, now I can. Can you see the present?
Yeah, you have 10 minutes or so from now. Thank you.
Greetings, everybody. My name is Jamil. I'm the founder of Quick Loan. Quick Loan, before I start and give an introduction about the company, a little bit background about me. I'm an MBA finance with over 15 years of experience. I started my career as an investment analyst back in 2006. We used to work for all the US-based commercial banks, investment banking arm, including the Wells Fargo, Wachovia, and some of the European-based private equity firms like Warburg Pincus and other smaller private equity firms were used to do a lot of work around the valuation advisory research with us. And before starting this Quick Loan, I was in Dubai, where I used to advise the working capital finance from the local banks, and where we are advising. And this idea of Quick Loan was born in Dubai. And I realized that there's a lot of challenge around banks and the customer in order to ensure the technology platform can help them reducing the timeline and also to assess their worthiness and connect with the particular bank where their loan application can be processed. With that decision, I decided to come back India. And then in India, at that point in time, we started bootcamp, and a European FinTech Accelerator was a scouting for acceleration program in Mumbai 2017 program. And we graduated from that high energy, stringent process of selection. And we are one of the cohort companies for the same. Now we are portfolio company of Startup Bootcamp. So formally, to introduce Quick Loan, what I'm trying to achieve, your brief background. Quick Loan is a credit scoring analytics based digital loan marketplace for personal loan facilitating through the partnered banks and non-banking financial companies regulated by the Central Bank of India, which is the Reserve Bank of India. So essentially what we are trying to achieve with this platform, that we are digitizing the entire loan journey, starting from the loan origination to underwriting, loan disbursal and collection of the EMIs from the same mobile app that we have developed and about to launch. This platform allows to customer to identify one particular lender where they can apply and get the loan application process then. As a marketplace, we have a list of banks and NBFC who are partnered with us. To name of some of them is leading banks of India, which is ICICI, SGFC, Tata Capital, and many others who we have partnered with. So far, the traction point of view, we have disbursed a loan worth almost $350,000 in the last 4 months post-COVID, when the banks have opened up to start lending. We are recognized by the Startup India, one of the Government of India initiative. We have raised a seed round of funding last year by 3 investors. One of them is the renowned investor and advisor to Avishkar Venture Fund, who is based out of Mumbai. And 2 other investors have also invested in the same capacity, in their individual capacity. So far, we, in terms of the product stage, we raised this capital to develop the product and increase the traction. Though traction is at a very early stage to validate. Post my product mobile app launch, there will be significant enhancement of the revenue, the production. Let me focus more about what is the problem that the Quick Loan is about to solve and is trying to solve. There are more than 70 plus percentage plus people in the country who are new to credit or new to bank customer, which is primarily those who do not have a borrowing history, never borrowed before, faces a difficulty to obtain loan from the different partner banks, because you would not know which bank is the eligible bank where you can apply. If you continuously keep on applying to the multiple bank, you will end up losing the worthiness, because your number of inquiries is very high. So in order to solve that, it is also a daunting task for a bank to look at and flip through multiple multiple applications, which is not matching or matching with them. That's a filtration that the bank would do. It's a cumbersome task. So these are the problem that we are trying to solve. And there are many application gets rejected because you do not have any prior credit history, right? And even if you have that small private credit history, which is like a thin profile, which has a very less than a 6 months of history of your borrowing in the bureau, that's how they call it as a thin profile. So those customers, we are trying to develop two major things. One is the digitizing the entire lending platform. Through us, we will be able to find one perfect lender for a one perfect borrower using our own algorithm, which is primarily looking at the digitizing the lending policies of the each of the banks in one area. The second would be, developing the underwriting platform, alternate underwriting platform, which is primarily sourcing through the bank statement data, which is by analyzing the financial expenses and the income. Alongside, you have the credit bureau record of those people who have borrowed before, and then you proxy with the new to bank with similarity of the similar kind of attributes. In addition to that, we are coming up with the mobile app, as I mentioned. It will help us with the consent of the customer. We will be able to scrape a lot of customer information through the handset about the SMS to understand where they are spending, how they are spending. Information related to bank statement can be pulled through the third-party integration, which is in US is a Yardley. In India, we have something Perfios, which is a bank account aggregator, which allows you to get the bank statement in real time through the integration. So this information, it becomes an instant paperless decisioning platform and automating the entire process of loan origination to dispersal. This helps the banks to minimize the delinquencies, because we will be doing thoroughly check on each of the application, and then it processes to the different respective bank. And it's a customer voice. If you look at the customer, do not have to knock to each of the different banks to go and find the loan, whether they will get it or not get it. So that's the solution that we are developing. In terms of the market size, as per the Boston Consulting Group report published, we in India, the total digital lending marketplace is of more than $1 trillion, but specific to a certain segment in the product, we are looking at is the unsecured personal loans. By 2025, it's almost $200,000, growing by a double digit of 20 plus CAGR. And if you look at the key facts, is that in India, more than 400 plus people having the mobile and internet access, and despite having a lot of established banks and the other lenders, the penetration is low in terms of the inclusion by the banks, whether they will set up a customer they would like to entertain, as because they are regulated. And that's open up the opportunity for the fintech to look at how, without being regulated, you will be able to help the first time borrower to get the loan through the partner banks. And how do you help the banks in order to ensure that the entire digitization helps them in reducing the cost of acquisition of the customer, and also the risk of the customer by doing multiple integration. And in real time, you will be able to verify the identity of the individual, employment, income, and the addresses of the individual in the real time. So that's what we are trying to bring in as the business model and looking at the market size. As far as the business model is concerned, we are, as I mentioned, is a marketplace, but we mention it as a marketplace plus the co-lending opportunity. So as a marketplace, you do not hold the portfolio of the bank, which is loan, and the loan remains with the bank. But as a technology platform, you become a customer acquisition channel partner for all the lenders. But with the learning of the different type of the data point that we call it as a alternate data, you will develop the underwriting solution that becomes a one source of revenue, when you can help the smaller lenders who do not have the capability of the analytics and the data science. You would be able to give them decisioning, and basis that you help them to build a better portfolio of the customer to be onboarded with them. That's one area where we will earn money in the fee that we get from the banks on the disbursal of the loan quantum on every month basis. As we grow the volume of the loan portfolio, our fee also increases. It ranges between 1% to 4.5%, depending upon how do you negotiate with the different banks and the other lenders. So that's how we make money out of the this proposition. The product and services is something that I always say the product, process, and the segment is my uniqueness in terms of how do we present, who do we want to sell this particular service. So personal loan, small loan, and personal line of credit, these are the three different products which we will be focusing one by one as we grow in our journey by raising our different capital round. So as of today, we are focusing more on the personal loan, and immediately within 1 quarter of the next year, we will be able to focus and continue on the smaller loan. So the difference that we are bringing here with the product, if you look at the product line timeline in the March to June 2020, we are introducing one by one product, and it may happen sometime we decide, and based on the research that we come up, that which product can go first can change here. So my first focus today, I'm talking to one of the lenders who has agreed to partner with us to use our platform in order to give the loan to students, but those students are the one who is preparing for the various competitive examinations in India, which is related to medical or engineering or management courses. And this loan will be given to their parents in order to
Sorry, Jama, you need to wrap up already. Yeah, can you try to wrap up already?
Okay.
Yeah.
So this is the product that I just talked about, the different types of the product that could go through over a period of time, and then focus more towards the digitizing the entire process. So as far as the milestone is concerned, we formed the company way back in September 2016. We did a lot of research. The Startup Bootcamp Acceleration Program happened in 2017. We graduated from there. We did a lot of bank partnerships, raised the seed round of funding in November, built the product. We did a lot of integration with the different bureau, which is credit bureau, and banks, bank integration with their system, lending system. So that's how we are moving towards. We are now focusing more towards developing the credit scoring model more robust by getting more data when we launch our mobile application. My target customer remains in India, it's a division of the cities is based on the population. So we will go to the cities where we call it the tier 2, tier 3 cities, away from the metro cities where there's a lot of opportunity which needs to be captured. And we receive application from more than 1,100 cities, but repeatedly we receive from 100 cities. This is our reach so far through our exercise of reaching out to the customers. I've already talked about the key differentiation, the 2 bullet points, the alternate credit scoring and underwriting platform, that will be the one key point, and digitization of the entire process of the loan, automating the entire process. In terms of the traction, I did mention, due to the COVID, the banks were not lending. Therefore, there's a March to June, there was no lending at all, zero lending, zero kind of revenue earned on this. But we have significantly moved to the numbers based on the amount of expenses that we incur. In terms of the team, I'm the founder of the company. The rest of them are my employee. I started my company earlier with my co-founder, who was from the very premier institute. He decided to go back to corporate world, and then I continued, and I have identified a couple of other people who will be joining a very strong, sound, experienced team to build it and to run this company with me in the next level.
Okay, thank you.
Investors, who I mentioned already. Thank you. I just wanted to finish 1 minute in case this is more important to highlight that I'm raising $2 million. I have a commitment from my existing investor of $215,000. I've been talking to a couple of people in California, in Singapore, and Dubai. They are in the first initial discussion, and they are kind of verbally agreed. We need to learn more about us, and then they can take the decision accordingly. Thank you very much for giving this opportunity to speak to you all.
Okay. Can I ask, is your market only focusing at India or beyond? So is there any licensing issue in any country?
There will be no licensing issue. As long as you become a lender, then you have to obtain the license of each of the country. But if you become interested to be a technology platform, you need to partner with the different lenders of the different countries, and you can scale it further, right? So Gary would know about this lending trees in the US. Neha would know, would know this supermarket in London, right? So they are the seasoned IPO companies. They started earlier, but at a differentiation that we are trying to bring in is here, what I have just mentioned.
Yeah. So currently you start from India, is it?
Right. So it's a big market. We want to focus here, and then we can slowly gradually. My interest is to go more towards the Middle East and other countries because there is a more digitization already happened. The product will change. The processes remain the same with us.
Okay,
See.
Shamil, I have a question. Who are the competitors for you in this
In
business?
India, we have a couple of
Yeah.
competitors. So there are two divisions of competition. One, who is a pure player of lead generation, okay, who has a seasoned company. So to name a few, I would say Early Salary is the closest competitor, and the India Lens is someone who would be a competition for me. But the market is such big that the use case is more important. So there is nothing no one could say is a very close. As a business model, your competition, but a product stage, you might not be a direct competition or maybe a competition to extent where your segment is still different. Like I said, somebody is individual salaried, looking for a education loan for a short-term period. I'm doing the one piece. There could be 1 or 2, 3, 4, 5 players in the market. So that's how they define of the competition.
Okay.
But as a business model, you will find a couple of others.
Okay, got it.
Okay, I think our time is almost up now.
Thank you very
All
much
right.
to
Yeah.
all the speakers today.
Yeah, great discussion here, and thank you, Dr. Nisa and Gary, for your valuable and insightful sharing. I hope all of you have managed to pick up some useful tips here and there. Right, before we go, we have prepared a special Christmas promotion for our audience tonight. If you were to sign up our VC Acceleration Program, we are offering a 10% discount off the list price. And also don't forget to sign up our ordinary members, to follow us in our activities and our events. It is currently still free until end of the year. We are giving away free membership for this period until end of the year for this COVID period. So do take opportunity to sign up as an ordinary member in our VC Prestige Club platform, and also check up the detail of our program and the memberships on our website. You can find it vc-network.org, which is here, over here behind the banner here, right? And any last word from our guest speaker before we end the session? You like to give your last word of advice for our audience tonight, Gary?
Yeah, sure. I mean, this is a great time. And what you need to do is you need to take advantage of this digital transformation. It's an amazing time for artificial intelligence. It's amazing time for Singapore and that entire region. It's a great time to move forward, but do it wisely, move forward as quickly as you can. I see you're bringing up our program, GSD Labs.
Yeah.
The key is to get out to the market in a very, not a shotgun approach, but a very pointed approach, a laser focused approach. And the GSD, I've been doing startups, as I said, for over 30 years. We've done 2 unicorns, and we have a pre-global accelerator. And the whole idea behind it is get the right kind of knowledge, but get it practically with some of the best people in the world, top venture capitalists who come in and really help you shape like clay to be able to turn it into a Rodin sculpture. And the idea is that the 360-degree view coming out of it will help you get the funding that you need, get the marketing message across, help with the partnerships and et cetera. We do it as really a precursor to GSD and our portfolio companies to really prepare you to go for that global journey. And looking at it, you're raising money. All the VCs that I know, unless they're very boutique and very small, are looking for companies that can have $1 billion valuation. And the way you get $1 billion valuations, you get into the network of people that have done it before and VCs that have the kind of money to invest. Focus on VCs and family offices that are particularly interested in your product or services. I know we heard about lending. We've heard about health. There's VCs that are directly in those areas. And the good news, those are the ones that we work with on a daily basis. So get out there, get the strategic partnerships in place. Press coverage is really important. If you Google my name, you'll see I've written over 100 articles just in the last year on artificial intelligence and entrepreneurship. You need to get the visibility, especially today, because it's really difficult to get in front of those key decision makers. So, anyhow, that's it. If you need me, you can reach me, Gary at gsdvs.com. You can Google my name, Gary Fowler and AI. You can reach me on LinkedIn. I love to talk to you. Get out there, get them. And as we say with the GSD, get shit done.
Yeah, you can share your LinkedIn over the chat box if you like to. Don't worry.
Yeah. Sure, I can
Yeah.
go in and do that.
Yeah, and Lisa, maybe you'd like to have a last word on about the program.
Yeah, so this is the program which we have designed with vcnetwork.sg, right? With Janet and I, we have designed this program. So this program is divided into two parts. The first part is about the mentoring and coaching, and that would be again in like different stages of the business that you are in. So if you are a total startup, then it will be about market validation and things like that, like firming up your business idea. But if you're already into business, so then it will be about how to generate more revenue or go to market strategies. And the third level will be again like how to take your business globally. So that is there. And yeah, so this program is a customized program. It will be based on the hour basis. So typically we have budgeted about 30 to 40 hours, and the pricing is according to that. But the hourly basis can be, discussed, so we can come at arrive at a customized number of hours consultation. And then finally we have also like a program which will be conducted for putting the startups in touch with the investors. So that's how either I think I Janet, we discussed about the physical program, right? So
Right.
we will be organizing a real like physical program. Now Singapore government has allowed us to do that. So from 28th December we can hold
The
those,
investor event, yeah, live face to face, not virtual.
not virtual. Yes.
Yeah.
So we are planning to do the face-to-face event with the investors. Along with that, you will get the contact list of investors and meeting with the investors. So that's the whole program is all about. And the details of this program can be found at vcnetwork.sg and as well as on Nishwan website. And our email addresses are uh, same like the website address. So
Yeah, you can find us there anyway. It's all linked. Yeah.
yeah, it's all linked together.
Yeah. All right. Thank you all. That's all for tonight. And yep, as Christmas is near, we wish all a Merry Christmas and a Happy New Year. Stay safe and good night for now. Thank you. If you have any question, please write into our email and we will help to address them as soon as we can. Thank you. Bye bye.
Thank you,
Good night,
everyone.
all.
Good night.
Good night. Night.
Bye.
Bye.